Welcome everyone to our MIT Club of Singapore AGM. We will first start off with a talk by Xiao Chunhui, and it will be on a whirlwind tour of blockchains and everything else that he will be talking about. All right, I'll have Ingtech will be the moderator. And so why don't have Ingtech introduce Chunhui? And so everyone, if you do a view speaker mode, you will see the speakers speaking.
Very good. Okay, are we ready to go?
Yes, go ahead.
Hi, good afternoon, everyone. My name is Ingtech. We have our invited guest here today, which is also our fellow alumni from MIT. His name is Chunhui. Chunhui has got his bachelor degrees in computer science and engineering, course 6.3 in 1990, and went on to do his MBA from the Booth School of Business in University of Chicago in 1996. He is currently an independent senior advisor to boardrooms in various corporations, and he has deep industry knowledge in the area of AI, systems engineering, system architecture, software engineering, as well as private equity, venture capitalists. So he has spent a lot of time in this area of blockchain, and he has posted and shared with us quite a few interesting articles in our group, alumni group chat group. So we thought this is a good time to invite Chunhui to share with us what is blockchain, and for some of us who may know something about it but not know what to do with it. Yeah, so maybe you can share with us what applications are being done with blockchain, what is distributed finance, what is non-fungible tokens, and what are all these things about. I think what happened in the crypto world or in the blockchain world in a few years, in past 5-6 years, is a bit unfortunate, because if you recall, in the year around 2017, 2018, there was a big rush, a gold rush in the crypto world. Yeah, people were doing initial coin offering, ICOs. So as a result, you got thousands and thousands of ICOs. That seems to be, the big hype, and it created a lot of FOMO, fear of missing out among traders and investors. So, and what happened then is we have the crypto winter, and the price of the coins dropped, and a lot of people got turned off. But I think what we want to do today is to share with the group that we are talking more about just ICOs and trading of crypto coins. Yeah? We are talking about applications, what we can do using this new technology. So, and here we have Chunhui to share with us. So, Chunhui, you want to take over?
Yeah, thank you, Ingtech. Thank you, Howie, and thank you all the MIT Expo members for inviting me. I'm delighted to be here and also share with you just a few words. There will be no pop quiz or curve grading for this. This is just a free-for-all discussion. It's not a MIT typical course lecture. I wanted to let me start my screen share first. Are you all able to see this?
Yes.
Yes. Okay, great. So my topic this afternoon really is, given the 45 minutes we have before we actually start the actual AGM, is to give you a very whirlwind tour of basically 3 areas relating to blockchain. Very much the first area is to cover the history and essentials of blockchain, in particular Bitcoin, and basically the 2 big areas of blockchain which has spun off from the basic foundations, which is the area of distributed finance, DeFi of short, and also non-tangible tokens, which is NFTs, very much digital assets such as art and collectibles. So if I may go through, the first few slides will be on the following. Some of us have followed the evolution of computer architecture and distributed networks for a long time. I think for those who went to MIT in the 80s, we were one of the first Project Athena, which was being sponsored by IBM and DEC in the 80s. We had GUIs on the DEC and IBM workstations, X consortium. So that's essentially what we call Web 1. And then came the big breakthrough in 1993, which was the release of Mosaic and the release of HTML, which is very much a hypertext markup language, taking one step further from hypertext developed at Xerox PARC and also at Apple Computer. So that was what Web 1, which some of us are old enough to experience. Yahoo, Netscape, Microsoft Explorer, which is very much read-only, information-only environment. Next came Web 2.0. Very much, it went from information sharing only to a transaction-oriented environment where we could do things like social media, e-commerce, transactions, peer-to-peer type of chat and all that. Today, right now, we are, I think, at the early stages of what is called Web 3, which is very much a token economy. Now, in the past 20 years, a lot of technology were developed using internet protocols. And what is very interesting is that these technology protocols themselves have become tokens, such as things we are familiar with Bitcoin, that's a token, but it's very much a protocol. We also are very familiar with Ethereum, which is also another protocol platform. So right now, we are moving, I think, in the very early stages, and I'm very excited right now because we are, especially us being part of the MIT community, we are at the verge of another golden era of computing. Okay. So Web 3.0 very much covers things from everything, every facet of interaction. The ones we are used to in the front end are as a user interfaces, browsers, applications we use for banking, for buying things, marketplaces, social media, and all that. Now, on the back end of the Web 3.0 is very interesting because right now we are morphing from a traditional client-server distributed architecture, what we can call a three-tier architecture, to very much a decentralized architecture where people communicate through APIs on a server-to-server basis, or their APIs actually connect with a blockchain, such as blockchains through things like Oracle gateways, etc. So right now, a lot of the revolution is actually coming on the back end for blockchain. The front end remains the same for us, man on the street, person on the street. What we see as the front end is still very much is a UI/UX interface. Okay. The genesis of blockchain came actually during the great financial crisis. There was a person who wrote a white paper for Bitcoin. I posted an extract of the white paper. Actually, you can find it on the Bitcoin website. It's written by an anonymous scientist called Satoshi Nakamoto. Now, people are speculating who Satoshi actually is because they don't really know who he is. He or she wrote this anonymous paper and released it. And the idea was to make Bitcoin very much a peer-to-peer type of cash system, which was secure and immutable. Immutable in the sense that fiat currencies and governments around the world couldn't print as much money as they could. And Bitcoin actually today has a very hard architecture limit of just 21 million coins. So Bitcoin sparked the revolution for the thinking in tokenization of currencies. Okay. You see now a picture. The Haynes Park is the very famous place outside London, which was a key area for World War II cryptography analysis and decoding. At the time of the war, the Germans were using the Enigma machine, and you can see that on the right-hand side of this slide. It's very much a 3 or 4 roto encryption machine where every day the German army would set the rotos. So the person you see in the picture there, who was one of the key scientists, it was a British Cambridge graduate called Alan Turing, and he and his fellow colleagues spent the remainder of war deciphering encoded messages. So what's actually blockchain? Blockchain is very much cryptography, which was invented many years ago, and they combine it very much with general ledgers, which are found in accounting journals and people who run businesses. So a blockchain is essentially an encrypted chain of transaction ledgers and journals, which are timestamped. And a typical blockchain is immutable, which means that once the ledger entry is verified and recorded in the journal, that data remains in the chain forever. Okay. Here's a high-level schematic of a blockchain. So the leftmost block is what they call a genesis block, which is the first block generated for a new blockchain. And subsequent blocks are basically combined together and linked back to the what they call a Merkle tree hash. So typically there's a header footer which references a particular block to the previous block. So especially over time, you have very much a whole series of a long blockchain indeed. Later on in the presentation, I'll show you the actual live net for Ethereum's blockchain itself. Okay, MIT faculty actually has had a relationship with the area of cryptography, blockchain, and actually distributed computing. The most visible one right now is the founder of Algorand, which is a competing blockchain to Ethereum. And Algorand's co-founder is Professor Silvio Micali. You might have had Micali as an instructor. His office used to be on the 3rd floor of Tech Square. On the pictures on this, you can see right now 2 very senior caustics professors. The lady on the top right is Professor Nancy Lynch, who taught me algorithms class, and Institute Professor Barbara Liskov, who's on the bottom right of the picture here. She taught me software engineering. And they were actually working to solve a problem back then in the 90s. It's a problem what they call a double spending problem in distributed computing. And the whole question of trust in a blockchain comes to basically a consensus algorithm. And the consensus algorithm problem actually dates back to the medieval days when the medieval empires like the Byzantine Empire had to make sure that all their generals were receiving the same instructions, or the generals were not trying to defect or give false information to other generals. Okay, so here you see on the next slide on the left here, very much distributed computing, especially in blockchain, is very much they have to cure the double spending problem and to also ensure that there's a consensus algorithm in place to make sure that there's no false transactions being done. Okay. On this slide here, sorry, I'm rushing a bit. It's a slide which is very much called the proof of work mining. Some of you who are more knowledgeable about blockchain and Ethereum may know that there are a lot of Bitcoin miners and Ethereum miners around the world today. What these miners do is that they're trying to solve the cryptographic puzzle fast to ensure that the blockchain transaction is properly validated and stored on the chain. And for them, mining and achieving the answer that the system wants, they get a reward in the form of what they call a Satoshi, which is a mini block, Bitcoin as a reward. So today, you hear about stories about mining, blockchain mining pools all around the world being run used to be run mainly in China, but now since China banned mining, a lot of miners have moved offshore. Okay. So the issue of POW, proof of work, is essentially to make sure that the consensus mechanism is well established and executed. Okay, let me now, there are two actually, I'll just take you to look at the main Ethereum network itself as we see right now. Okay. Are you able to see the new window? Yeah.
No, not yet.
I don't think so.
Okay, let me do another share.
While we are getting this up to the audience, if you have any question, please feel free to type in the chat box so that I can help you coordinate for Chung-Hui. Thank you.
Yeah, can you see the window right now with the Ethereum network? Yeah.
Yes, now can see.
Okay, this is actually the live net itself for Ethereum. So this browser is actually showing you the Ethereum blockchain as it's being built right now, live, you know. And you can see where my mouse is pointing. These are all basically the transactions and the blocks which are trying to be formed in a blockchain for Ethereum. So this is a whole series. They're all linked together in hash table. Here, what this particular latest block ending 473 is linked back to 472 and so on. So you can see very much there's a queue for the transactions to be done with a proof of work by the nodes who are doing the validation there. I'll also very quickly here, just to show you that, just for reference, here is a block ending number 477. Let's go to look at 477 here, inspect it in more detail. There's a tool called Etherscan right now. And basically, Etherscan will show you you can actually peek into the actual details of particular block. So that's here, we look at blocks 476, which is one of the most recent blocks right now being curated online. So typically in a blockchain, let's say for Ethereum, you can see the block number and the timestamp. And these are all important because this shows you the serialization and immutability of the transaction ledger itself, when the block was created and how many transactions were placed in that block, along with the miner who successfully did the proof of work to validate the transaction. This is a Bitcoin miner called Nanopool here with their hash address. Yeah. So these are case, people say, well, blockchains are not transparent, they're used for money laundering, all that. The ledger and the platform is actually fully transparent. Where the money laundering takes place is between the conversion of the coin and fiat currency. That's where very much the transparency lacks. But within the chain itself is actually very transparent. People have the tools and anyone can inspect the public blockchains as we are doing right now. Okay, so I'll just show you back. So you can see right now, this is going on 24/7 all the time. Chains are being built, blocks are being added right now. We are just looking at Ethereum right now, which is one of the main blockchains being used. Let me go back to my slides now. Okay, so since Bitcoin was introduced in the white paper in 2008, there are basically thousands and thousands of tokens which have been launched, especially during the ICO coin craze in 2017, following the launch of the Ethereum blockchain network. So today, I think I counted, there are over 4,000 or 5,000 coins and tokens listed, which are some of them are tradable on the main exchanges. Most are tradable on the distributed exchanges. I would say a good 90 or 95% of them will probably collapse and have zero value later on. Very much like a big rush into the startup economy where most startups will not survive on the long term. So if you are keen to see this snapshot is from a website called CoinGecko.com. And you go to CoinGecko, they are very much they'll publish the prices and the network activity for all the coins being traded on the platforms right now. Okay. Similarly, we'll talk about this a bit later. The big area that Ethereum's platform attracted is very much DeFi type of applications. DeFi stands for distributed finance. So very popular things like swap application to swap one coin for another. Things like Uniswap, SushiSwap, ZK-Swap, etc. Then there are also applications such as peer-to-peer lending, staking for yield purposes. There are also basically applications which allow payment transfers through blockchain networks. And most popular, of course, are wallets. Wallets allow blockchain users to store their coins. And wallets can be either in the form of an online browser extension or even a USB core wallet, which is in the form of a hardware key. So we'll talk about this slightly later down the presentation. Okay, so as I mentioned, Bitcoin's white paper was released in 2008. Ethereum's white paper was also launched in 2013, and Ethereum's network, the Genesis block, was launched in July 2015, and that was followed by the ICO frenzy for new coin tokens year 2017. Okay. Okay, so in this snapshot of DeFi, blockchain attributes are the following. They're autonomous, they're trustless, meaning that they don't need a central figure to authorize transactions. The network and the system are self-governing in terms of the uptime and also the consensus mechanisms by the people who are running nodes on the blockchain. This obviously for blockchain enthusiasts has the potential to disintermediate a lot of central authorities such as financial institutions and also any type of central party in a transaction. In the past, let's say if we buy from a book from Amazon, Amazon may sell you their own book or they may sell you a book by one of their merchants. But in Amazon centralized marketplace, Amazon processes the transaction on behalf of the buyer and seller. Going forward, I expect there'll be very much direct peer-to-peer type of transactions going forward without a centralized figure such as Amazon, for instance. So very interesting days, obviously, still subject to a lot of regulation and shakeout because people are trying to understand the legal and socio-political implications of a trustless and disintermediated network. So people ask me, how do you build DeFi? Well, for us who took engineering or science at MIT or any other university, right? All these are very much building blocks. So once you have the core components, you have the tools, you have the blockchain platform itself, you have the software, you have the blocks and coins made by other startups. You continue to build on top of these blocks as you do in a Lego toy, right? So over time, more and more startups and teams will build more and more interesting basic bricks, which allow people to build more interesting things on top of that. Okay, this is currently a DeFi snapshot. I'll say I'm only probably familiar with 1 or 2% of it. That, as you can see, because of abundance of venture capital today and abundance of capital raised through issues of tokens by these startups, there are so many applications being launched, for each of these sectors. So you can see on this slide itself, the things from payments, exchanges, liquidity, derivatives, stable coins, which may make fiat currencies, insurance, credit lending, etc. So you can't obviously cover all of this in depth. So if you're keen on blockchain or thing, I would say just focus on one subdomain which interests you and dive deep into that sub area. Yeah. Okay. these are issues which are well discussed in social media and in the news. A lot of the DeFi tokens right now are what they call pump and dump schemes. Very much people just trying to raise money, and then the project has really no technical business merits. Once they raise the tokens, get the tokens and coins, they just sell it, and then the whole team just disappears. Other big issues right now you can read in the press, both locally here in Singapore and around the world, are things like anti-money laundering issues, KYC compliance, regulations, taxes, and all that. Most authorities in the respective countries are trying to get their hands around it. Some are obviously trying to embrace it, but they are trying to figure out how to best manage this very evolving landscape itself. Yeah. From a investor standpoint, obviously, if you're keen to buy a token, you don't really know which one will do well over time, right? So one might be popular today, here today, and then maybe gone tomorrow. Then from an engineering standpoint, you have a lot of issues with networks and systems, just as you do in the traditional engineering IT systems. You have issues of scalability of the platform, time latency of transaction processing, also the fees required to transact your blockchain transaction. And then things like cyber security and network availability. A very visible story, I think, last few months was a competing blockchain called Solana. And then Solana the Solana network was down for, I think, quite the big portion of one day. And they found out that the disruption actually came because most of the nodes were hosted on AWS. Yeah. So all these are practical but real issues if you are going to use the blockchains for real commercial and dependable transactions. Okay. All right. The last part of my talk is talking about NFTs. The idea of NFTs actually was under the radar, but I think Singapore was where the splash was done initially. You probably read NFT stands for basically non-fungible tokens. Fungible means you can modify it. Non-fungibility means very much you can't change the content. Something else is one of the kind. Okay, so today NFTs very much you can take things like people are using it for their own artists, their own art collection. People are also launching NFTs for their own fan clubs and collectibles. And then I think going forward, there are going to be NFT cases for like legal type of documents from land titles, contracts, etc. So I think NFT is also in the early part of evolution right now. We are very much looking at the hype surrounding creative art collectibles right now. Okay, if you can see this example of NFT, on the left is a big graphic. It's actually the collection of an artist called Beeple. Beeple is a social media graphics artist. He's been drawing daily digital graphics for the past many years. And he decided, I think within last year or so, he curated all his drawings to date and sold it under one entire collection. He sold it to Christie's auction house, and the buyer was actually a Singapore-based investor. I think this created like a earthquake within the NFT auction market, because this collection was sold, I think, in excess of like 60 or 70 million US dollars, which very much turned out to be about, I think, 5 to 10,000 US dollars per daily drawing of him. So post this earth-moving auction by Beeple, everyone also joined into the NFT craze to mint their own. I'm sure some of us locally know of someone who are minting, or we ourselves are quietly minting our own artist collection to be sold on OpenSea or Variable, which are the two most popular platforms for minting NFTs. Yeah. On the right here, you can see the top right graphic is from the CryptoPunks collection, and the bottom right graphic from the Weird Apes collection. All these are very trendy NFT collectibles today. So same thing for issues for NFTs. Do you consider this really? Are they really originals? Are they fraud, fakes? You know, how about copyright protection after you transfer the NFTs to another party? And as in all technology is also prone to hacking and cybersecurity. Last, I think there are also issues about using art and NFTs for money laundering. And then how would you impose taxes on NFT investors, traders, or content owners? Yeah. All right, that's the end of my slide, and I'm happy to take questions. Intake may really have some very much. Yeah.
I have to unmute myself. Okay, thank you, everyone. We have a question from Soma. He's asking standards such as ERC 1155 and the thing about fungible and semi-fungible and non-fungible tokens. And he would like to know what are the possible applications in the future.
Yeah. So I think 1155 is now the latest iteration, because NFTs initially were supposed to be non-fungible, right? Let's say for digital art, once you curate it and mint it, you can't change or modify it. But then people thought about, okay, we want actually art to be a product life cycle management. Let's say someone sold you a digital pet, right, in the form of NFT, like the Tamagotchi. The Tamagotchi pet, there's a life cycle to it, and then you are allowed merely to modify. You want the pet to grow or change the behavior and all that. So I think that's interesting, because the digital art itself is no longer static, right, as the timeline passes. So in the latest iteration, they're making it semi-fungible. So you have dimensions such as being able to change it from a static art to a life cycle art type of form. Yeah. So that's still evolving. I don't know the answer to that, over time, or any predictions. It's up to your imagination, right? So very much I encourage everyone from MIT Computing, you say, okay, back to the Lego building blocks, first principle. I have all these blocks, right? They're giving me this block A, B, and C. I can do this and that. So based on this terms of reference, what can I build on top of that? Right? Goes back to the Lego bricks hypothesis.
Okay. If anyone has any more questions, please use. Okay, we have one from Eugene.
I see that about ERC 1155 being a digital payment token. Legal issues. Okay, let me just give you my first thoughts on legal issues. I think any token of currency very much is, for me, I work in capital markets for a long time. Besides price discovery, a token or whatever form of currency or barter trade is always a willing buyer, willing seller, relationship, right? So it can be anything of value that the buyer and seller is happy with to be transacted at the price which both parties at a legitimate form of tender, right? So in terms of other legal issues, I'm not sure, unless later on there's some disputes or claim post-transaction. Always think is a willing buyer, willing seller, set up with market clearing price mechanism. I'll just share my thoughts. I think maybe I'll say something. I think locally you can see in the past year a lot of global crypto exchanges and companies have set up headquarters here, at least HQ. But I think regulatory-wise, locally we're still very cautious. I appreciate the concern by the regulators locally with regards to how to best govern the industry while still letting it evolve. But however, I encourage all of us from a standpoint, us, especially us MIT engineers, right? We go out and build. So building things are part of our DNA as MIT engineers. So I encourage all of us who are engineering or science background, those ideas, continue building on this. The foundations are already there. I think also these days, for people who are building things in engineering, especially in software and open source, it's an incredible time. Never have you had so much computing power, right? Either on your desktop or on the cloud for so cheap. Thank you for Moore's Law, right? Second, so many communities on blockchains ourselves are all GitHub source, right? People freely write and share their codes online through Git and other open source platforms, and that's the best way to learn. Last October, not having programmed for over 20 years, I joined a Chainlink hackathon. Right? Chainlink is a very important component in blockchain because it exchanges information from the blockchain smart contracts to the off-chain traditional IT world and vice versa. So I decided, okay, I'm going to join a 5-week blockchain hackathon, right? I serve as project manager for it. I got 3 or 4 programmers from Eastern Europe and the Bay Area in my group. And then we basically collaborated on Discord and all that. We wrote a proof of concept, blockchain for bond issue, right? A corporate bond issue from origination, book building, auctioning, book allocation, then post issue of the bond, including coupon payments and all that. And we did it in 4 weeks for proof of concept. Yeah. So it's all there. It's for people who love to experiment. The POC and sandbox platform is always there. You just need most of the capital or investment you're going to spend time on is actually your own time management, but the cost is almost zero.
Okay, fair enough. I think it'd be good point to leave to our members. So now we know some of us are interested in blockchain, some of us have more questions. So maybe after today, you can reach out to us. I think the next exco, depending on how the election goes, which direction they want to take, we may form another 1 or 2 exchanges like this. But regardless, I think Chung Hui, I mean, you should be okay if people go to you to express interest and question to explore this further.
Yeah, I like to continue the legacy of the culture that we all experience at MIT. Very open culture, very sharing, right? I like to just continue that. I really had an incredible time at MIT, right? The faculty members and our peers and all that. I like to continue to replicate that tradition here locally here in our local.
Yeah, sure. I think this is an interesting time because I came across a lot of proposals also. Of course, the blockchain and cryptography is a fad, and a lot of people are chasing ideas, and I've seen a lot of proposals. But if you actually need to think through whether do you really need a blockchain to do this, or it's just just a proposal, and then there are other ways you can do it, solve the same problem without using blockchain also. So that also will help us to go down the correct path that we spend our resources.
Yeah, I mean, it's a common question. During the past year, I've spoken to many senior leaders of companies or that. They assume that they need to go from blockchain, right? But after several conversations with them, actually what I think is as important in blockchain that people don't realize is that companies today they are right now transacting or communicating mainly through email or to human. But I think the API economy, right? API stands for Application Programming Interface, is so important because API is for your IT environment will be the one which will allow you to scale, right? And prove your relationship. I mean, take for example some of the new credit card processing companies, right? In the US, the startups, they are actually an API company, right? They are not like the traditional credit card processing companies as we know, First Data or all that. Very much these startups are very much API. So when you sign them up to help you with your payment processing, all you get is actually an API kit, which is incredible. So I think API is underappreciated today, especially here locally, right? We are still transacting the same old way, human to human. So API will allow actually a lot of EDI, data interchanges to like JSON, to REST APIs, also to like say different type of formats, right? And it'll take a lot of the burden off in this part of the world, especially in Singapore, where we are burdened with a shrinking population or not enough IT resources. So I think API is as big as blockchain, if not bigger.
Sure. I think it's a good point, Chung Hui. It's also about getting ready for blockchain. If you don't have these basics right, blockchain cannot help you much. So maybe some of this discussion can also get into what are the preconditions necessary to leverage on this new technology.
Yeah, because blockchain and any, especially digitization, it follows actually the human and work processes of any company or team or corporation, right? So if your processes are not scalable or they are backdated, then using blockchain or IT or API will just scale up the inefficiencies. I think we saw that 20 years ago, right? When people, at the time, 20 years ago, ERP systems were the mainstream. Everyone was trying to put in Oracle Financials or SAP. Then when they went through the exercise, they found out that a lot of their business processes were antiquated. So the software part actually took a small portion of their re-engineering. Their main burden in terms of time and spending was actually on the business process re-engineering and human organization reorganization.
Okay, we are running a bit short of time here, so I think we can end here. And I encourage those who are interested, either reach out to Chung Hui, reach out to me. We can continue this discussion. I'll be interested to follow up with you guys also.
Yeah, I think Howie is maintaining. Howie and the Exco are maintaining the WhatsApp group right now. If you're not on it, ask Howie or the Exco member to put it on. And then you can get my contact through them, or I'll just leave you my email right now. Hold on. Sorry.
Chung Hui, final question from Eugene, which is something I
cannot hear you. Sorry, Ching Su.
Hello, can you hear me now?
Very soft.
Oh,
you were too far, I think.
No.
Yeah, I hear you correct now. Go ahead, please.
Yeah, so there was a question by Eugene, which is something I struggle with as well. I'm reading out his comments. If you are a piece of art, that's fine, but performing as a currency?
Oh, as a currency. Well, the currency, yeah, I mean, currency, you need it to be a standard unit, right? And you need probably a lot of it. So I think you can have art. I think that's the idea. Let's say I have just one piece of collectible, right? One piece, let's say one Mona Lisa on it. I can actually do a synthetic asset of that. I can issue a token which fractionalizes the Mona Lisa, right? And that one will be tradable, right, as a currency. No. But the underlying will be, let's say, a single NFT, like a very rare one such as a Mona Lisa, right? So you can actually build a synthetic currency on top of an NFT, just to give you an example, right? So, I mean, because some people who approach me are talking about fractional ownership of luxury watches. 2 weeks back, the head of a former Lamborghini dealership in Singapore approached me. He says they want to fractionalize use time of a Lamborghini and all the supercars. I said, okay, yep, not an issue. It's very much like a timeshare thought, right? These hard assets, you want to drive your McLaren or your, Bugatti, going on, or that you can fractionalize it in the token. So same thought process on a rare NFT. Maybe there's only one piece of that worldwide, but you can still issue a token built on top of that, and you can fractionalize that. So you can issue millions or billions of that fractionalized token on top of it, and that can be a currency.
Any more last words before we hand off back to Howie for the AGM?
There's one more point. I don't know. Can you hear me?
Yeah.
Yeah, because the moment your token take a form of transferability, then you can become a digital payment token, and that's where all the regulatory authorities regulations will come in. So which is why I think if you stay to NFT, that's fine. But if you come to ERC 1155, there's a certain kind of interchangeability and fractionalization of NFT. You can run into regulatory compliance.
Yeah, I mean 1155 is the most widely used token. It's Ethereum based, right? And then it can be on any DeFi which runs an Ethereum based platform. So, but going back, I'll just share you a story. You know, I used to laugh when I was undergraduate at MIT in the 80s, right? Besides my friends and I, my classmates, every Friday night we go to Chinatown, right? After a week long of classes, we go and eat, right? And then some of us didn't bring enough cash to settle the Dutch street dinner, right? We basically speak equal. And what we did, we exchanged, right, as form of token. I used to come up sometimes because I live in East Campus, close to Building 20, and that's where they used to sell the discounted, cinema tickets for USC cinemas and GCC cinemas. So I would my wallet, right? So and that was accepted barter payment for US dollar fiat, right? So barter currency, I think most of us are stuck in the traditional world of fiat currency. But I always go back to the first principle is willing buyer, willing seller transaction, right? Yeah. That's barter trading, right? The days where people use stones, shells, whatever form, right? That was barter trading, right? One chicken for maybe one cow for 10 chickens or whatever. That's all barter trading, right? But now with technology, especially on blockchain, all that, it becomes frictionless. I think that's the scary part. Yeah.
One more question. I think this has been baffling me. So maybe Chung Wei, you seem very willing to share. So Ethereum is supposed to be decentralized, right? But they are speaking with so much confidence, to move from proof of work to proof of stake. So if you are decentralized, how can you speak with such confidence? That's my query.
Yeah, that's what Ethereum Foundation is moving, right? They want to lower the gas fees, of course, for Ethereum, which has been a big source of complaint, right? So they're moving from POW to POS. The merge 2.0 is coming out, right? I don't know what will happen on that. I think slowly you can see Vitalik and the others from the foundation, they're starting to, all the blockchain founders obviously come with some universal principles, right? They want to do good. It's like Star Trek, right? Captain Picard says, come out with this, the Federation of Planets. But over time, you can see they have to change all this because whatever they do, the market is reflexive, right? The participants will start changing their behavior. So I think every infrastructure is like that. Once you put it out, you have to, it goes through an evolution, right? So I think people always say, okay, let's say, sorry, my last point I want to share. People say, oh, Ethereum's technology is lousy, Solana, Cardano is better scalable. I said, okay, I studied at MIT in the late 80s, right? We had all the state-of-the-art workstations, Athena, IBM DEC, HP, right? Apollo workstations, all the high-end, right? When I was about to graduate, I got offer to work for Microsoft, right? And Oracle. And it's a joke, right? It seems like Oracle, Microsoft at the time didn't even have Windows 3.1, right? It's a DOS interface, it's 640K memory, right? A limited architecture. We are all of us MIT people were laughing. Who wants to work for Microsoft, right? But then look at Microsoft user base, right? The tools were the most expensive, right? They were cheap, right? PCs were plentiful, either IBM originals or clones, right? So in my mind, a blockchain platform may have technical limitations, but the one who wins in the long term is the ones who have the largest user group and developer group, right? Yeah.
Okay. I think maybe we can take the subsequent discussion offline because we are running into our budgeted time for AGM. Thank you,
Yeah.
Chung Lee. We will continue this discussion offline. Yeah.
Mobile number. Yeah.
Okay.
So
how we?
line or...
Okay.
I'm going to stop recording.
Thank you all. Have a good afternoon ahead.